I'm Alan Kenny, Editorial Director with REIT.com, and I'm coming to you from Chicago at REIT Week 2013 NAREIT's Investor Forum. Joining me is Jed Reagan, analyst with Green Street Advisors. Jed, the story in the office sector for the past really 5 or 6 years has been pretty clear. Struggles along with everything that's going on with the larger economic picture. How would you assess the office sector's ability to kind of adapt to these really trying economic circumstances?
Yeah, I mean, I'd say there's no question it's been tough sledding in the office sector over the past few years. This recovery has been one of the slowest ones we've seen in recent recoveries. That is largely a function of the very poor job growth climate we've seen out there. And what's made things worse for the office sector is office tenants are really in efficiency mode. They're getting much tighter with their office space usage, and so the little job growth we have seen really has not translated into office demand in a meaningful way. Now that said, office REITs are actually faring relatively well in this environment. They're seeing slow but steady occupancy growth. And it's a reflection of the fact that most of them have higher than average quality portfolios, and there's been a flight to quality in the market, so those REITs are benefiting. And I think the REITs that are doing best are those that have exposure to energy and tech-driven markets, such as San Francisco or in Austin or Houston.
Okay then, Jed, so all that being said, is the office sector fairly valued right now?
That does appear to be the case today, but historically has not always been the case. Historically, office REITs actually tend to underperform most other major property types, both in the private and the public markets. If you look back, in fact, over the past 13 years or so, office REITs have underperformed the broader NAREIT index for 10 of those 13 years. And I think that really just speaks to the sector is a tough business with high capital needs, generally lower NOI growth profile, and just an ease of new supply. Now that said, today, as we look at the office market, it does appear to be fairly priced. Office REITs are trading roughly on par with net asset value, and the office sector appears fairly priced in the private markets as well. And I would just add that the apartment sector and mall sector appear more attractively valued at today's pricing.
Okay, we're in June right now, year's halfway over. Let's look to the second half. What's going to be the big story in the office sector?
I think I would point to several things. First of all, I think New York is going to be a big story in the second half of the year. Manhattan is the largest and most important U.S. office market. It's generally been pretty stagnant over the last few years, but there are signs now that may be changing. There's some momentum building, both in terms of fundamentals and asset value appreciation. So I think that's a story that's going to continue to accelerate through the year. I think more broadly, office demand is going to be kind of a rebound story. As I mentioned, office demand has been relatively tepid so far in this recovery, but there are signs that may be changing, and office demand may be returning to historical levels as you see some green shoots in the economy with the housing recovery, and then office tenants just feeling better and more confident about the macro environment and just fewer uncertainties hanging out there.
Okay, so then what about the supply dynamics in the market?
Supply is going to become a bigger story in the second half of the year. Supply has been a silver lining for the office sector so far in this cycle. There's been relatively little, and folks have not been putting up new office buildings, but that appears to be changing, particularly in some of the hotter markets like San Francisco or Texas, and now developers are beginning to get more aggressive in development, including some of the office REITs.
Okay, Jed, thanks so much for the update.
Thank you.
And for more on this and other REIT news and analysis, be sure to check out REIT.com.